Welcome to Allgen's Money Minute. So as tax season is upon us, a question that arises is, are there any last minute ways for me to save on taxes? So while most of the tax deduction strategies are gone because we're into the new year, there are still a few that are available to you if you qualify for them, okay? So one way is if you own a business, whether you're incorporated or you're sole proprietor, okay, you could establish a SEP IRA. A SEP IRA allows you to take a deduction against what you made in the company. So you could put up to 20 or 25% of your income. Now, consult a tax professional on this because some income doesn't count if you're incorporated, etc. Okay, but all that aside, you could put up to X amount away and get a deduction on that and leave it in a retirement vehicle earning money for you potentially. Okay. The good news is about it, it's flexible because you don't have to deposit the money until you actually file your taxes. So if you do an extension for your business September 15th, let's say, you don't have to actually put the money in until September 15th. So that's nice and flexible if you own a business. Now, on the individual side, you could also establish an individual retirement account or a traditional IRA. This allows you to put money away, deduct it for the previous year, and have it grow tax deferred until you pull it out at 59.5. Okay. Now, there are some income limits that say that the IRS sets that if you make too much money, you can't deduct it. Okay, so as always, consult a tax professional and see what your situation is. And a third way that doesn't really get discussed much is an HSA, a health savings account. Okay, you could put money and take a deduction for that inside your HSA. Now, to qualify for that, you actually have to have an HSA qualified insurance or medical plan. Okay, so not everyone has that, so that doesn't apply to everyone. So you'd have to see if you qualify for that or not.
Yeah, absolutely. And so one word of caution, though, when you're looking to reduce taxes, it's very tempting this time of year, and when you see how much you can save on taxes by making a contribution to these vehicles, to want to do that over looking at where you're at in your financial path. You know, if you're in the foundation phase, the foundation life stage, and you have a lot of consumer debt and that's weighing you down, but you know, at that point you're thinking about making an IRA contribution or something like that, it may be better off to put that money towards your debt as opposed to making that IRA contribution, because that allows you to build wealth really quick once you have your foundation built. If not, that'll always be tugging on you.
Right. Yeah. So as always, we say there are some ways, but you have to make sure they're the most relevant and advantageous to your particular circumstances. So we hope that helps, and we hope to see you soon.